How you doing? I'm Big D. Welcome to the show. I really appreciate you stopping in, and if you don't mind, smash that like button because I know you're gonna like the information that I give you today. I know sometimes reality is very strange, and what we're going to talk about today is silver and what is going on with Greenland. They are connected, especially now. Please stick around to the end. You're going to want to know the complete story. Now, if you were to tell me, say a week ago, that the global market, the global silver market, a market which is worth hundreds of billions of dollars, that would be brought to its knees, all because the President of the United States wants to buy a frozen island in the North Atlantic, I definitely would have said you're nuts. But here we are. It is Monday, January 19th, 2026, and the world has just changed. By now, you probably have heard about the deadline, or the headlines. Sorry, I'm getting ahead of myself. The mainstream media is having a field day. They're laughing, joking, when they have no clue what's going on. No clue. They are making jokes about the president trying to buy Greenland again. They're interviewing Danish politicians who are outraged. It is a circus. But while the media is laughing, the bullion bank in London, New York, COMEX, are screaming because buried in that tweet, hidden behind the hidden headlines about purchasing Greenland, is a single sentence that effectively destroys the logistics of the pipeline for the global silver market. President Trump has announced a 10% tariff on all imports from 8 European nations, including the United Kingdom, starting February 1st. And if a deal for Greenland is not reached, that tariff jumps to 25% by June 1st. To the average person, this sounds like a trade dispute. It sounds like politics. But to a risk manager at JP Morgan or HSBC, this is a nuclear bomb. Let me explain why. The global market relies on a concept called fungibility. It relies on the idea that a 1,000 ounce bar of silver in London is the exact same price as a 1,000 ounce bar in New York. And more importantly, it relies on that ability to move that bar back and forth cheaply and easily. The banks play a game. We call it whatever you want to call it. Nothing comes to mind that's this psychotic. Now, when the price of silver rises in New York because of high demand, the banks take silver out of their vaults in London, specifically from the LBMA, and then fly it to New York to flood the market and push the prices down. Controversially, when London runs dry, which it happens right now, due to the Indian and Chinese demand, they take silver out of the COMEX vault in New York and fly it to London to refill their shelves, when both of them are very low on supply. So don't let anybody kid you. They're at the lowest numbers that there has ever been, in my opinion. Depends on who you talk to, they'll give you the same opinion. This constant flow of metal across the Atlantic Ocean is the lifeline of suppression scheme. It allows the banks to pretend that there is always enough silver because they can just shuffle it to wherever they want to bring it, from New York to London to New York. But what happens when there's a 10% tariff wall in the middle of the Atlantic Ocean? The United Kingdom is on a tariff list. The LBMA is located in London, which is in the London or United Kingdom. This means that starting February 1st, if the U.S. bank ships silver to London to bail out the LBMA, then tries to bring the silver back to the United States later, they will have to pay 10% tax on that value of the metal. At 90% an ounce, or $90 an ounce, with a $9 tax per ounce. That destroys the profit margin. It destroys the arbitrage. It makes the game mathematically impossible to play because essentially President Trump just turned the United States border into one-way value for silver. Metal can come in, perhaps if it comes from a non-tariff nation like Mexico, but metal cannot leave from London because it can never come back without a penalty. That wipes out the bank's equity. This creates a trapped inventory scenario. The risk managers at the major banks are looking at this tweet right now on a Monday morning. Might have even had the information probably yesterday. And they're issuing a stop move order. They're telling their logistics teams to halt all exports. They cannot risk sending metal to London if they cannot get it back, at least for the same price. Now, this effectively cuts the LBMA off from the COMEX. It serves the connection between the two world's largest pricing hubs. And this is happening at the worst possible moment for London. We know based on the vault data that has been analyzed in my previous videos that London is critically short for physical metal. The flows to India and China have drained the LBMA vaults to historic lows. They were continuing to count on the 4.2 million ounces that were withdrawn from the COMEX this past Friday to save them. They were waiting for the cavalry to arrive from New York. But because of this tariffs news, the cavalry is not coming. Unless there's a problem and they can make it happen with Greenland. And Greenland is now owned by the United States. Until that happens, I think this tariff is going to be in place. Now, silver was supposed to fly to London and is now grounded in New York. This transforms the Friday night heist we discussed in the past. We thought that metal was leaving the country, but now it is likely stuck here. This is bullish for the U.S. price. I don't know if you've seen it. Today's price was almost $96 for an ounce of silver, not including premiums. If London cannot get supply from the United States and they cannot get supply from the miners, where do they get the metal to settle their contracts? They don't. London goes into physical default much faster than New York. The Greenland tariff is a black swan event, in my opinion. It is an event that nobody predicted. Yeah, they predicted. They know exactly what's going on, especially because of how the tariffs work. Nobody priced in, and nobody has a model for this, supposedly. The algorithm that trades silver are programmed to look at interest rates, the dollar index, the industrial demand. They are not programmed to calculate the impact of real estate dispute over a ice sheet in the Arctic. This is why human analysis matters. This is why you watch this channel, I hope. Please subscribe. Now, the machine sees a trade war. We see liquidity trap. The banks are now forced to make a choice. They have to choose which market to save. they can keep their metal in New York or let London burn. This is what you have to understand. Both of them are in the same situation. Neither one of them can get enough silver to supply. Remember, it used to be 3 days, you purchase one day, process the second day, out the door the third day. If it was a purchase, if it was, the futures, derivatives, fake silver, that kind of stuff, that's a different story, because a lot of them, they didn't even receive the actual physical silver. It was a hope and pray that the price goes up and they make money. And it also was used to keep the silver prices low until now, because of demand. Now, they can send metal to London and trap it there forever, leaving New York exposed. They cannot save both, because these banks are mostly U.S. or have massive U.S. operations. They will likely choose to protect the COMEX. They will circle the wagons around New York. This leaves the LBMA exposed to the full force of the Asian demand that we've discussed previously. Now, the Shanghai vacuum is still sucking. And now the new spigot, the New York spigot, has been turned off. We are about to see what's going to happen with Western silver market. We might see silver trading at $90 in New York and $110 in the LBMA or the London metals market, simply because the metal cannot move between the two cities. Supply versus demand. Now, the law of one price has been repealed by executive order. In the next part of this scenario, we're going to look at the logistics of the trap. We're going to explain the concept of the Roach Motel effective in commodity markets. We will explain why this tariff forces banks to hoard metal domestically, even if they don't want to. It forces them to become preppers. And we're going to discuss why this accidental policy might actually be the most effective American first move for critical minerals. Inadvertently secures the domestic supply chain by making it too expensive to export our wealth. The media is laughing about the Greenland, but the bankers are crying, and you, the silver stackers, should be paying very close attention, because the walls of this prison just got higher and the silver is locked inside for you. We need to talk about a concept in commodity trading that is absolutely life and death for the bullion banks. I would suggest, I'm not telling you go do this. I'm not someone that has a license, so take what you learned from here today and do your own research. But I think if you can find silver, I would buy some. Now, this is called, the life and death for the bullion banks. It is called the location swap. In a normal world, silver is liquid. It flows like water. JP Morgan has too much silver in New York and not enough in London. They don't just physically ship it immediately. They often do a swap. They trade ownership of bars in New York and for ownership of bars in London with another bank. The system relies on the assumption that eventually the metal can be moved to balance the books without any penalties. It relies on the idea that 1 ounce of silver is worth the same amount on both sides of the Atlantic. Not anymore. But President Trump's 10% tariff just destroyed that assumption. He has turned the United States bullion market into a roach motel. You know the old slogan, roaches check in, but they don't check out. Well, now silver checks in to the United States, but it doesn't check out. Here's a logic that every risk manager on Wall Street is grappling with this morning. Let's say you are a bullion bank. You see that London is desperate for silver. You want to ship 1 million ounces from your COMEX vault in New York to the LBMA vault in London to stop a price spike. Sending it there is easy. There is no export tax. You put it on a plane, it lands in the Heathrow airport, and you save the day for London. But what happens next month? When the COMEX runs dry and you need to bring that silver back, New York, to settle a futures contract. Now you have a problem because that silver is coming from the United Kingdom. It will be hit with a 10% tariff on the U.S. because of the U.S. customs. If silver is trading at $90 and you have to pay $9 for every ounce that's coming back into the States, the $9 comes directly out of your profit margin. If the low margin world of bullion banking, a 10% hit is not a loss. It is a catastrophe. You're screwed. It wipes out the profit of the trade 10 times over. So the risk manager looks at the spreadsheet and says, we cannot send the silver to London because once it leaves U.S. soil, it effectively costs us 110% to get it back. Well, I think that what they could do is make a deal. Say, whatever we send you, say 50 million ounces, you have to pay the tariff to bring it back when we need it. That's fair. If you need it now, we're helping you out, but you need to take care of any penalties. That's what I would think. It's called doing business as. Now the silver trapped. The silver's trapped in London. This destroys the whole scenario, the whole gang. My apologies. The bank can no longer smooth out the volatility. If London spikes to $120, then New York stays at 90. The banks cannot step in to close the gap because the tariff wall is in the way. This creates a market segmentation. It means that we are going to see wildly different prices for the same asset depending on where it is sitting. We've seen this in the past. Look at Shanghai. They are much higher than the United States is, or the LBMA. This is nothing new. Now, depending on where it's sitting, right? So this brings us to the accidental genius of this move. Thank you, Donald Trump. Being an American investor in silver, physical silver, you don't hold it, you don't own it. So make sure you have your own silver in your possession, not somebody else's, or buying that fake paper silver. Again, I'm not telling you what to do. I'm just giving you some ideas of what could possibly happen. Watch my last show. It could be helpful for you. Now, the media is focused on Greenland. They're just watching. They're not paying attention to silver. They think this is about ego. They think it's about real estate. Sure, we need it for national security. With Russia right next door, it's a great place to have a base. But they also have precious minerals in that property. You think silver's one of them? So by trapping the silver in the United States, President Trump has created a domestic strategic reserve. We talked about in our previous videos about the need to secure critical minerals for national security. Because guess what the military needs? It needs a lot of silver to build missiles, minimum, and electronics for all the equipment that is needed in the military. We talked about how the U.S. Mint was running out of metal. We've talked about it multiple times. This tariff solves that problem instantly. And if the banks cannot export silver to the London because of this tax risk, that silver stays here. It stays in a COMEX vault. It stays available for Tesla. It stays available for Raytheon. It stays available for every electronic builder, along with chip manufacturing, along with anything you could think of, automotive, laptop, cell phones, those types of things. It stays available for that. It forces the gold supply to remain within the borders of the United States. It is America's first applied to the periodic table. It forces the rest of the world, especially Europe and UK, to fend themselves for themselves. It tells London, you are on your own. You cannot raid our vaults to save your exchange anymore. This is what I've been talking about for the longest time. I think this is going to push the COMEX and the LBMA to close because it cannot deliver. It's so unfortunate. Not for us. Not for us that are trying to get the real price of silver out there. Some say it could be hundreds of dollars. Some say it could be in the thousands. Who really knows? No one does. But if the supply can't meet the demand, and silver is worth a lot more than what they're showing us on the books right now. Now this puts the LBMA in a death spiral. London is the hub of the global physical trade where the vast majority of the silver flows to India and China. If London loses access to the U.S. stockpile, they have zero buffer left. We know their vaults are empty. We know the float is gone. And now we know the resupply line is cut. This explains why the 4.2 million ounces that were withdrawn from the COMEX on Friday are so critical. On Friday, we thought that metal was leaving the country. But with this tariff announcement coming on this morning, actually it's probably even as early as yesterday, I'm sure it was out there. It is sitting in a warehouse near JFK Airport, wrapped in plastic where nowhere to go. The owner of that metal has a choice. They can ship it to London and eat the future tariff risk, or they can keep it in the United States and sell it to a domestic buyer. Given the uncertainty, the smart move is to keep it here. This means that the physical squeeze in the United States might ease slightly in the very short term, but the physical squeeze in London is about to go nuclear, and that's going to push the lie even faster. So more people are going to find out. More people are buying silver. And because silver is a global asset, if London breaks, the whole system breaks. This is what I'm hoping for. You cannot have silver trading in London for $200 and $90 in New York. The panic will spread. They might buy it in New York and sell it in London. But there is another layer to this logistics trap. It involves the refiners. Many of the major refiners that supply the U.S. market are located in Europe and Canada. If the tariff applies to any and all goods from these nations, the imported silver bars just got 10% more expensive immediately right off the bat. This raises the replacement cost for U.S. dealers. If the APMEX or JM Bullion want to buy silver eagles and the U.S. Mint is closed, which they're closed, they often buy rounds from private mints. but those private mints buy grain from refineries. If the refiners in Europe, the cost of that grain just went up by 10% overnight, that cost gets passed on to you. So even if the spot price stays at 90 bucks, the premium on the physical silver in the US is about to jump again. The dealers have a price and they have to price in the tariff. I mean, right now, a 10-ounce bar is about a little over $1,000. A 10-ounce bar, which in June was selling for $350, maybe $400. Depends on who was trying to rob from you. Now this validates, that's June of 2025, by the way. This validates the $120 street price we discussed just the other day. The Tariff Act is a floor for the premiums. It bakes inflation into the physical product. We're watching the financial world go crazy. The globalized, frictionless trade of the last 30 years is over. We have entered a world of tariffs, walls, and trapped assets, and the world having physical metal in your own possession is the only safety. You don't want to own a contract for silver in London if London can't get a delivery. You don't want to own an ETF that stores its metal in jurisdiction targeted by a trade war. You want the metal in your own hands. Now, this effect means that any silver that enters the United States financial system is never leaving. It is being hoarded by the state, by the banks, and by the industry. The logistics of the trap is perfect. It freezes the banks in place. It stops the shell game. It forces them to show their hand. And when they show their hand, the world will see that they are holding nothing but paper. In the next part of the deep dive, we are going to look at London crisis. We're going to shift our focus across the ocean to the LBMA. We're going to explain why this morning in London could be the start of the historical default. New York is trapped, London is starving, Shanghai is feasting. Shanghai, like I said, they've been more than the LBMA and the COMEX for quite some time now. The logistics are broken. The price is next. We have analyzed the effects in New York. I've explained why the silver sitting in the United States is now trapped there by 10% tariff wall. But the understanding the full gravity of what is happening when the market opens today, which, like I said, is almost like before I came on to do the show, it was about $96. The London Bullion Market Association is the beating heart of the global physical trade. While the COMEX in New York is a futures casino, London is where the big physical deals are settled. For the last 3 years, London has been bleeding. We have watched a relentless exodus of silver from the LBMA vaults towards India and China. The inventory in London has dropped to levels that many analysts consider critical. The amount of silver that is unencumbered, meaning it isn't already owned by an ETF, is frighteningly low. London has been surviving on a lifeline. That lifeline was the ability to import metal from the Americans' COMEX vault. When the vault in London ran dry, they could call up a bullion bank in New York to ship millions of ounces, and the banks would do it. They would execute a sweep, location swap to keep the game going. But Saturday, Trump cut that lifeline by imposing a 10% tariff on imports from the United Kingdom. He made this transaction financially toxic. New York is going to ship silver to London if they have to pay. They are not going to ship silver if they have to pay 10% to bring it back. I mean, who knows what's going to happen in a month? Could it be $150? That 10% is even more. Now, so London is now an island, literally and financially. They are cut off from the COMEX. They're cutting off the Mexican supply chain. They're still facing the insatiable demand from the East. This creates a siege mentality that in the city of London, when the sun rises, the traders in London are going to realize that they are insolvent in physical terms. They have sold more silver than they have access to, and the backup supply for New York is not coming. This is the recipe for the local default. We could see a situation where the price of silver in London disconnects completely from the price in New York. It's going to have to. And it's going to stop also. I think this is another reason why Trump did this. Because it's going to stop the suppression of the silver. They use the derivatives to keep the price of silver low. They keep the futures. They use the futures, the fake paper silver, to keep the price of silver low per ounce. Today is showing that it is a high probability that silver's price today will break an all-time high. Maybe by the time this show hits the airwaves, silver is going to be at a new all-time high. We could see silver trading at, like I said, $90, $95, maybe $100. London trading at 120, 140. Who knows? I can't wait to see. I'm excited. How about you? Because in London, the metal is scarcer, and because it cannot be found away due to the tariffs, the price difference will stick. This kills the concept of the global spot price. If you have a price in Shanghai, a price in London, and a price in New York, which one is the real price? The answer is the one where you can actually get the metal, first of all. The second would be, who's got the cheapest price? And when can I have it? Before we go deeper into the mechanics of the London collapse, I need to address something important. We are someone that I believe that you should have on your subscriber list. So please subscribe. I am a pretty decent source. I try to come on once a day, especially when there's news. I'm going to try to do everything I can to try to get together so you can have an idea what's going on too. I usually spend a long time trying to come up with a script for the show, but it's been very easily to keep coming up with a script to give you guys. But unfortunately, we have noticed a wave of crazies out there that don't believe that this is happening. It's right in front of you. You can see this. Just go onto the COMEX and see what they have available for silver. And now, look what the LBMA has. Look what Shanghai has. Put it this way. I'm just a single guy. I do all my own editing. I do all my own videotaping and script writing. I do get some help with. There's some people out there I very, very well trust. And they help put a pretty decent show together. And if you like it, please do subscribe. Oh boy, no. But if you appreciate the work that I do here, the forensic analysis and the deep dives, I do as much vetting as I can possibly do to make sure I'm giving you accurate information. And please help us protect this community. Go down to the comments section and type in, just give me a heart. Give me an amen. Give me something that I know that you're watching. You don't have to put out a comment if you don't want to, but if you do and you want to put out a comment, I do appreciate it as well. Let the algorithm know that you are here for the real analysts of what's going on with silver and crypto and multiple other things that I bring to you. Now, most banks run a global book. They might be long silver in London and short in New York. In a normal world, these positions cancel each other out. They are hedged. But if the price in London screams higher than New York, their hedge breaks. They start losing money on the spread. This forces them to close their position. They have to buy back their shorts in New York and sell their longs in London. This creates buying pressure in New York. The tariff that traps silver in the United States actually forces the United States price to rise. The banks have to buy New York contracts to cover the risk that London blows up. So the idea that trapped inventory would crash the United States price is wrong. It creates a panic bid as banks scramble to rebalance their broken books. And let's look at the unallocated accounts in London. Millions of investors hold unallocated silver with the LBMA member banks. This is essentially a fractional reserve banking system for metal. In London, it cut off supply. The risk of allocated default skyrockets. If you hold unallocated silver in London, you are basically holding a paper IOU from a bank that just lost its main supplier. When the market realized that London is kind of screwed, we expect a massive run on unallocated accounts. Investors will rush to convert their unallocated credits into allocated metals. But there aren't enough buyers. This forces the banks to go into open market and bid for any metal that it can find. This is how a liquidity crisis turns into a major crisis. That's best way to put it. The Greenland tariff has exposed the fragility of the global system. It showed us that silver market is not a unified ocean. It is a series of connected pools. London is now draining fast. New York is filling up with trapped capital that cannot leave. This makes the United States market the most secure market in the world. If you own physical silver in the United States, you are holding strategic inventory. But if you own paper silver in London, you are holding a liability that is about to be tested. The divergence between the two markets will likely create chaos as early as today. You might see the arbitrage bots malfunctioning in the wider spreads. This is what happens when the logistics break. The price mechanism fails. And remember the 4.2 million ounces we discussed from Friday night's heist? We can be almost certain that metal is now stuck. The owner of that metal is sitting on a stockpile in New York that they cannot export without a 10% loss, at least going to the LBMA. So what will they do with it? They will hold it or sell it to a U.S. buyer, like a domestic buyer like Tesla, or to the U.S. Mint. Why did the U.S. Mint close? Maybe they didn't have enough silver. There's a lot of stories out there why they closed, but Now, this implies that the domestic supply in the United States might stabilize, but at a much higher price point. The tariff trap is the ultimate unintended consequences. A dispute over an island in an Arctic has triggered a meltdown in the city of London. I just think it gives Trump an in, what he's been wanting to do. Now, it proves how tight the market truly is, and a market running on fumes. A tariff is a spark in a powder keg. London is burning, the bridge is cut, and the fire is spreading. In the next part of the deep dive, we're going to look at what's going on this morning. We're going to analyze the charts, which will react to the logistical nightmare. The system is fragmenting. The global order is dissolving, and the silver is the only thing that is real. Stay with the original. Don't forget to leave a comment. Now let's prepare for what's happening today. We have arrived at the conclusion. The world of silver, we woke up to this Sunday morning fundamentally different from the whole, I believe Sunday morning is when it happened, but I know this from this morning. So let's go with Monday morning when we woke up. Fundamentally different from the one we lived in, say, past Friday. We have this deconstructed the Roach Motel logistics and exposed the crisis facing the LBMA. The era of an ununified global functionless silver market is over. Trump's executive order reintroduced the law of physics and geography into the market that had forgotten them. You watch. There's going to be something that they're going to push it to a court order to stop, cease and desist to President Trump. And he's just going to keep going forward. He's going to find a way to get it all the way up the chain, the Supreme Court. And by that time, it's going to be a done deal. And then the Supreme Court's going to overturn the lower court's decisions. So what does the future look like? We're not going to make a prediction. I'd like to, but I don't want someone out to go out and say, well, you told me to do it. And okay, but let's get onto it. The price could gap up $20. Or the bank could try to smash it down one last time, which they try and they try and they try. But it keeps bouncing back, especially the last 6 months. Instead, we are going to look at the long-term structure. We're entering the era of regional pricing. In this era, the price of silver will be determined by where it sits. Metal inside the United States will trade at a premium as strategic silver. Metal in London, however, is now stranded silver, disconnected from production in America. Now, this destroys the ability of commercial banks to suppress the price. Suppression requires certainty and the global flow to bail the banks out. But the tariff introduced basic risk, the banker's nightmare. If the tariff wall prevents moving metal, their hedge falls apart and they are exposed. When banks face risk, they stop shorting and reduce leverage. The paper shorts are leaving the building because the game has become too dangerous. Without artificial suppression, silver will finally be free to find its natural algorithm. It is a price high enough to incentivize new mining in a world where energy is expensive. It is a price that reflects silver status as the unsung hero of the digital economy. So what is the verdict for you, the individual investor? Strategy-wise, One, geographic diversification is dead. In a world of trade wars, moving metal across borders is becoming impossible. The safest place for your silver is where you are. Strategy number 2, ignore the spot price. The spot price you see on the TV is now just a math error, an average of 2 broken markets. Value your stack based on replacement cost. If you sold your silver today, could you buy it back? What premium would you have to pay? Strategy number 3, the long game. The tariff on the UK is just the first domino in a shift towards resource nationalism. Every country is going to start hoarding what they have. We are returning to a world where hard assets are the only collateral that matters. Cash is weak and probably worthless. That's the way I look at it, at least. Now the tariff trap has locked the door. The silver is staying here. As we head into this week, expect chaos, confusion, settlements from the banks. But you know the truth. You know that the logistics have snapped. We just need to know that the trajectory is up and the floor is solid. I don't think silver's going to drop too many times, or by 10, 20 bucks or anything. I don't believe. But then again, I'm just a learner, just like you. But it doesn't look like it. It looks like $94, $95, whatever, is the floor. I think the government has rigged the game in favor of the physical holders. So hold your position. I would not sell. Do not get shaken out of the volatility. Eventually the price will settle much, much higher than what it is today. But thank you for being a part of my day. And do everything you can to help my show. I do appreciate it. Please like, share, subscribe. Leave a comment for me. It does take a little bit to do this research. It does take time to put up a show, videotape, edit. I don't edit a lot out because I'd rather you see an actual person making mistakes. And if you expect a hot chick, I'm sorry, that's the best I got. This is who I am. I'm Big D, and I do appreciate you stopping in. God bless and have a great rest of your day.